Um, just a question. Is it possible to somehow just dim the light, or because it's just too much of light in the head? Just maybe dim it a bit, no? Okay. So, yeah, let's start a bit later. We have 1 hour, 20 minutes to go. People are still catching up. I would suggest you not to sit on this side. Join us closer here to sit in front of the screen. Be a bit more compact. Okay, so welcome to our session, which is called Technology Applications in Agriculture Insurance and Disaster Risk Management for Climate Risk and Natural Catastrophes. So we'll speak today about the technologies, the insurance and disaster management programs. We have a very good lineup of speakers. There was a hope for a bit more people, but I guess they are still trying to finish their lunch, so they'll come to us. Anyway, we're starting now, and I am your moderator today. My name is Jan Shinkarenko, and I'm the Business Development Manager at VITO, at the Remote Sensing Department. We call it Environmental Intelligence, mostly attached to agriculture, but working also on carbon imprint, on forestry, air, water, quality monitoring, and many other things that we do at Remote Sensing. So today we speak about technologies and how they influence the insurance operations, disaster management operations, how they can contribute. And one of the most important points to cover today, among the goals for me at least, is what is the gap and how can we close that gap with the operations in insurance and disaster management, having the technologies that basically are already commercially used and operating on the market. With that, I would like to invite our keynote speaker and welcome speech, Lydia Bosoga, from the Ministry of Agriculture. Thank you, Lydia.
Thank you, and good afternoon to everyone. As they indicated, I'm from the Department of Agriculture. We are responsible for the policy and legislation dealing with natural resources management, in which disaster also occur in those environments of agriculture. Okay. From our working space in terms of policy and legislation and program, we acknowledge that agricultural production is one of those businesses that is very sensitive to extreme weather and climate condition. And this extreme weather and intensity of weather's events creates floods. They also create droughts and some field fires, and it poses risk for agricultural production, and it also includes impact of farmers' livelihoods and investment, and therefore we, from the government side, need to look into enabling environment that looks into the policies and programs to support farmers. And further, we also look into how best can we prevent such condition timely. How do we share information? How do we engage other stakeholders and prepare them such that they will still be continued food production, but also farmers can also continue with their lives. So there is a number of legislations that we are working on, some which aligns to the disaster management, but also from the department side, there are about 3 regulatory frameworks that we are working on. One of them is the subdivision of agricultural land, which looks into how the land is being cut into smaller pieces that can create and pose a challenge of land degradation as one of the concerns. And we also have some legislation, including the Conservation of Agricultural Resources Act, that also assists with the planning, supporting farmers to have farm plans, and with those farm plans, then they could be able to employ management practices. And by planning that, they also are supported through programs on how they can enhance their production. And with those legislation, we also have provisions and supporting mechanism that encourages an agro-ecosystem approach. For that, then we are linking to institutionally with the programs. Some of the programs focus on infrastructure, and some of them look into the landscape, including the land care program. For those, we do have different focuses area. We have focuses areas that are talking to the field management, focuses areas that are talking to the soil management, and practices such as conservation agriculture. And we do that acknowledging that this is not a one-size-fits-all. There will be those who are able to procure huge machinery to work the land, and there will be those who will require a different support mechanism from that. And we work with the research institutions as well, so that we develop new cultivars for cropping to cope with challenges of climate change. And also we look into what will be the coping mechanism, both regulatory and from the program guided by the science. And there are a number of training session and capacity building sessions that are coordinated from government side, both from national, province, and even to the district, to ensure that as we collaborate, we share information, but also we support farmers as the needs arise. There are a number of challenges that we experience, and I think one of them is data availability. Among others is also we are losing productive agricultural land, and that impacts not only the farmers but the whole country in terms of food production and availability of food in the country. So with those challenges, some they disrupt the production systems and then have a negative impact towards availability of food in different scales. And with those degraded landscape, as I mentioned, we are challenged by data availability, and with that data availability, people find themselves working on vulnerable or marginal soils and creating land degradation. So there is a number of support programs that we're encouraging. Among others, we are training officials on drone that we can monitor the spaces that we are farming. We are also supporting farmers with equipment such as no-till planters that are encouraging water retention and cover crops, which are supporting livestock farmers, that even in times of need of drought, then we could be able to have feed for the livestock. So we are looking forward for how best we could be able to, from the government side, partner not only with us as government, but also our research institutions and other state statutory companies, that we are collaborating to ensure that there is enough information for us to support farmers. There is enough equipments to work the land, and there is enough support that is required at a reasonable scale. More so, I think the Earth observation is one of them, which is very key in terms of spatial data to ensure that we have required information timely to inform farmers to react as and when the climate change or floods hit. I think as well, we believe that continued analysis of the information that we are having and looking into the trends that are occurring and comparing it to other sectors or other stakeholders out there is very key for us as government, such that as we plan, we can collaborate, and as we plan, we can have informed decision based on lessons learned from others. So we support a programmatic approach of government in planning and ensuring that we prevent and manage risks such as land degradation, deforestation, drought, and related to that threaten the agro ecosystem for food production in the country. With that, I think we are looking forward to those partnership and collaboration. I thank you.
Thank you very much. Thank you, Lydia. And let's move on. We have next speaker with a presentation on the technology applications in agriculture insurance specifically. This is Roman Shenkarenko, the agriculture insurance expert and consultant, international consultant.
Thank you, Jan. Good afternoon. It's really a pleasure to be here today and to talk about what I really like. So this is my life, and that's what I used in my work when I was the program manager at insurance companies. And my trip with the new technologies in agriculture insurance started in 2008, when the satellite technology has been very expensive. I mean, just using them. The imagery was scarce. Expensive, $40, $60 per hectare. Drones were something unknown, and this is the situation what changed considerably right now. So when I'm talking about the new technologies for agriculture insurance and disaster risk management, I mean, from my perspective, it's satellite remote sensing, it's GIS and mapping, drones, and weather data sets. So currently, the new technologies, they provide us the services with mapping, with monitoring risks, and this functionality is really developed. It's functional and operational. Also, the technologies provide us lots of data, both satellite and weather data, which we can use for product design and for pricing, premium rate setting. So right now, some of the platforms that I'll be talking today, they provide us with 15, 20 years of data, which is localized, and you can download it easily in Excel format, and you can start analyzing data just within a couple of minutes. However, I have seen probably about 30 different platforms developed in different countries, like in Germany, in France, in UK, US, Canada, China, India. But quite a lot of these platforms, they do provide some data, but it's like nice pictures, as I say, but it's very difficult to interpret and very difficult to use for disaster risk management and for agriculture insurance. And the reporting and analytical information based on this data is still underdeveloped, and this represents a big opportunity in the future. And this is what I'm talking to the technology companies on what we can do for agriculture insurance. And one of the biggest challenges, probably, what I say, is that many companies, they try to develop some platforms, and they want this to be multi-user focused, like for farmers, for input supplying companies, for banks, for insurance companies. But from my experience, what I've seen, most of these solutions are not suitable for insurers because they are not in line with insurance procedures, processes, and internal requirements for underwriting and loss adjustment. That's why all of these solutions, they need to be further developed and to be more specializing to respond to the needs of agriculture insurers. So as for the historical and actual weather data, it's already available, and it's available practically everywhere in the world. It doesn't matter which country. Right now, a number of companies, they can provide you online localized historical data that you can use for risk assessment. You can analyze the historical risk events. You can identify severe events in near real time and in the past. You can plan response, and as an underwriter, I use this data for underwriting decisions, especially for complex risks, and that was really working. Also, this information is very useful for loss adjustment and claim management. Just in this case, I'm showing you an example of data that I used in my work, that in 2018, it was very dry in Australia, and you see that I could kind of select data. It was 6 years. and I need to understand how bad the drought was that year in this location. And you see that the data for 2018 shows us that the whole season was extremely dry and precipitation was unprecedentedly low. That's why we could expect that our customers, the insurance, the farmers, they probably will have some losses, and that will help insurance company to prepare for the claim season and to respond adequately to do the service that insurance companies need to do. Also, as the weather data is available, the data sets must be checked for accuracy. Right now, there are a number of data sets, like about 25 or 30, like ERA 5, icons, small chips, whatever. But every time we select the data set, we need to check the data set whether it is suitable for our location. So here you see the example from Vietnam. The team that was developing the disaster risk management solution, they used the data from the ground-based weather stations officials in Vietnam, and they compared several other data sets. And you see, it appears that TRMM was probably the most suitable one because it provided data very close to the data that was reported by the ground-based weather stations. Another example is from Zimbabwe. This is the assessment of the actual data and chirps for the period of 2014-17. Again, you see the chirps sometimes underreporting or overreporting data. And if we select this data set, we need to be confident that this data will work for us. And another example is the data from the city Lagos. Again, comparison of chips and ERA 5. And we see that ERA 5 has a trend downward. However, the chips is more or less consistent over the time. So when we decide which weather data set to use, we need to make analysis first for that. Another example is that right now a lot of people say that, okay, we will solve the problem with weather data when we install the automatic weather stations. But first of all, weather stations shouldn't be cheap. And again, this is the investment that needs to be done by somebody. But if you see the weather station standing like that, with the heat point here, if it is surrounded by the dense vegetation, broken weather station, very tall trees very close to the weather station, can we expect weather data to be accurate? Because these weather stations are examples from India and Cambodia that tells us that we need to check automatic weather stations before we use this data for our work as an insurance and disaster risk management, because these stations, they will provide very bad data. So the station placement must be within the requirements of the World Meteorological Organization. It must be tamper-proof, and we need somebody to do the quality data check. So now we move to drones. So a couple of years ago, there's been a big belief that drones will be instrumental to assist with disaster risk assessment and especially for response and also for agriculture insurance. But using drones can be very challenging from the operational costs because the drones are not cheap. Also, we have different regulatory regime in different countries. The pilots must be trained. They sometimes are required to get the license. They need to know how to work according to the procedures. Currently, some of the companies, they develop the automatic flight platforms and drone fleet management solutions. But in any case, we have problems. So in my work in Australia and also in Europe, we had a problem with predatory birds, that eagles will attack the drone, and when you lose the drone costing $2,000, $3,000, then you need to substitute with something. So that's a loss. Also, we had cases when the operator lost control of drone, and drone flies away into the ocean or somewhere in the mountains, and you never will find it. And sometimes the operator just forgets to bring additional batteries. And then kind of we have one flight of drone, and then the whole day is going in vain before the operator will charge these batteries. So this technology is good. It can provide us very good data, but there are some challenges. So at this slide, oops, what happened? Okay, at this slide, you see this is the example how we use drone in our work to assess the maize fields in the Caucasus. And it was very useful because We put the drone in the sky. We know the problem points, and instead of spending 10 or whatever days to make assessment of a very big customer, we could do it in a couple of days. It's very helpful. When we do the drone mission, we will get imagery like that. And then the system, the platform, can give us the percentage of the parts of the field where crop is underperforming. And then we see the spots. And we will know exactly where to send the loss assessor, where they need to take a look at the crop, and at which spot. I actually used this imagery from the satellite also to do the quality control of loss assessors, just to be sure that they took samples at the right spots of the field and the results are representative. If the farmer will have a claim that the assessment was done not in the right way and he disagrees with the results, I will use this and I will check where the assessor was taking the assessment of yield. Many insurers, especially in developing countries, are underestimating the power of the localization of the insurance policies. So this is not difficult to do. You can collect the location data for fields, or at least for the policies, for the farmers, and you can create quite easily, downloading the Excel spreadsheet into the platform. And you will know exactly where your customers are located. So then you can compare where your customers were last year versus this year. You can control the accumulations. You will know where the large risks are located, where the big number of smaller farmers are located. And this is the real case when my management at the insurance company came to me and said, Roman, we're expecting the landfall of the tropical cyclone in this point. Can you tell us what's our exposure, how much of loss we may expect to get out of the cyclone? I could do this job because we started to collect this information from farmers in 10 minutes, and we knew that our exposure was only $1.2 million, and everybody was relieved, but the management was really kind of, how could you do it so quickly? Well, because we are prepared for this. We use new technologies. Even in the countries where we don't have much of data, some free solutions like Google Earth can provide very useful underwriting information. So this is the case when I was talking to one bank in Guyana, and they were providing loans to rice farmers. And they said that we don't have data, and our underwriting is really very basic. But I said, well, even if you use Google Earth, if you collect the coordinates of the field, you will know where the field is located, and usually we know the closer the field to the village, the higher chance of some problems at the field because of a human interruption, whatever. Also, the closer the field is located to the ocean, the bigger chance that the storm surge will happen and we will lose this crop. So these are factors for underwriting solutions that we can get even with very simple solutions like that. Again, this is the satellite. This is my favorite. So when we use the satellites to look at our fields, at our customers from the sky, and we can do it both for agriculture insurance purposes and for disaster risk management. We can use satellite imagery to identify what is happening here. So this is the example of underwriting pre-acceptance survey of a very big operation, 2,500 of almond orchard. I had to visit the farm and to make solution whether we can insure it or not. So from the sky, we've seen that there are some problems been here, here, and here. When I came to the farm, I talked to the farm manager. I asked him, well, can we go here and here and here? And he said, how do you know where to go? I said, well, have a look. That's a printout. I see from the sky that these are the problem areas. What happens? Well, he said, oh, God, you know everything. How can you do this? So here he had a frost damage of the trees. Here was the pest infestation, and in this location it was the problem with the trees, new trees establishment because of high salinity, the soil quality, and irrigation issues. Instead of spending a couple of days at the farm, I spent only 2 hours. We agreed with the farmer that we could insure, and I increased my premium by 20%, and the farmer didn't object because he knew that I know everything what's going on there. This is also the case when the satellite imagery can help us to identify the crop condition before the risk event and after risk event. So there was the hail event in 2017, I think, in the northern part of New South Wales. And the farmer, when insured the fields, he said that these fields were not irrigated and these fields were irrigated. But when I look at this image here, I see already that before the risk event, these fields were not doing very well. So that's why these losses here, after we see, actually some of the fields after hail event were not as bad. So initially, the farmer was asking for 4.2 million of claim payment. But after we identified this problem, which was before the risk event, we explained what we see from the sky, and the farmer agreed for 1.8 million of payout. So we saved, just with 15 minutes, look into the fields from the satellite, we saved a lot of money to the company. And the farmer agreed. There was no kind of a dispute or whatever. So when we look at the platform existing, so already we can get a lot of useful information. So this is the example of Watch It Grow, platform developed by Vita, and you can see how much of data you can get for location, and you can analyze it. You can use it for underwriting decisions. You can need to understand whether we can insure the farm or not. We have access to the greenness, temperature, rainfall, some other parameters. And what is more important, even if the farmer wants to insure this field at this point of time, we can go backwards with the satellite imagery. And usually the platforms give us 2 years of previous imagery included in the package. And on demand, you can get access to 5 years of data. So you will know how each field was doing after planting, how the crop was establishing, and what problems potentially could be at this field. It's very powerful. It's very useful. Another example, that's another platform that I used in my work. It provides us with a very good opportunity to analyze the portfolio or the country, which probably may be in line with what South Africa needs. So we using the satellite data. In this case, it's rainfall. We can see how the country is doing. This is the example of Serbia. We see that the northern part is in the drought situation. Some parts, there may be some excess rainfall. And what is the beauty of this platform specifically? I can switch off the years which were normal, and I can compare the current year, which is 22, with other bad years. And I will know how bad this situation was this year. Also, the platform, and several platforms, they provide us with the functionality to compare different parameters. In this case, it's rainfall, and NDVI, which is the measure of the crop health. Again, you have lots of years, you can take off the good ones, and you can compare how the situation is bad this year. You can understand whether you can insure this crop in this area. You also will know how bad the loss may be and how much you will need to pay to the farmer. And this will make our work as insurers very accurate. The same data can be used for disaster risk management. When we have some events like drought, like flood, we can compare how the crop was doing before and after event, and we can use historical data to see how bad it is this year. So I find it fascinating that we have it. There are some solutions developed by the developing organizations. In this case, it's PRISM by World Food Programme, and this is the case of Mozambique. So here we see the rainfall forecast for the country. And again, we see that in some parts of the country there may be heavy rain, there may be a threat of flooding, parts of the country will have no rain at all. But these free platforms, they usually provide us only factual information. There is no access to the historical data, and the decisions that we can make, they are a bit limited. But the beauty of this is that we can look at the country scale. It's free of charge, and I think there will be some future development of these platforms, of these solutions as well. Okay, so what are the problems right now? So the technical capacity with many insurance companies remains still low. Although many companies, they know that satellite technologies and drones and weather data sets are already present and they're useful. We lack skilled staff, knowledge of how we can use the data, and limited skills in doing the GIS applications. Also what I've seen, in general insurance companies, if it is the general insurance company, they have very small agricultural team, and the company management doesn't have the focus on agriculture. In these cases, it's very difficult to substantiate the investment of money into use of new technologies, and this is really a very big kind of a block stone on the road. With specialized agriculture insurers, like we have in several countries, like let's say in Switzerland or in Austria, it's much easier to agree that they can use the new technologies, they can allocate some investment straightforwardly, and usually such specialized in agriculture insurance companies, they apply technologies earlier and on a big scale. Also, disaster risk authorities, they must use new technologies for preparedness, for analyzing the risk profile, identify the past events, especially if we have 15, 20 years of data. We can catch events 1 in 20. So we can look at them, we can know what happened there, and this will help us to prepare to respond on the risk events in the future. And main reasons from my perspective, that's my life, what I did when I was in insurance company, we must introduce new technologies. It's really a processing speed. Underwriting referrals, we spend much less time. Risk profiling becomes much easier. You don't need to look at some almanacs, atlases, some additional sources. You have all information in one spot. This is really great. Also, we can enhance and improve claim handling. We can make claim payment more accurate and right in line with the actual loss. This will reduce the number of disputes, and it will increase trust of the farming communities in the insurance companies. Also, it's cost saving on loss estimation. So I had a case in 2016 when there was, 2018, when there was a big hail event, and a lot of farmers, my customers and other customers, the industry loss was just $120 million in one day. But I didn't have enough of loss adjusters to respond to the situation. And according to the rules in Australia, we had to process the claim within 10 days. We had to send a person to the field in 10 days. We couldn't do it. But because we used the platform with the remote sensing data, we just looked at our customers because we knew where they are located. And if I seen that it's a total loss thing, do I really need to send a loss adjuster there? No. What we did in this case, we just sent a notice to our customers and asked them, do you have the total loss? If you think that you have a total loss, and I already have a proof, but we had to do this kind of formality. The farmers responded, I had a total loss, fine. 2 days, you get a payout. So it really helps. We can also check the work of the loss adjusters. Unfortunately, in my work, I've seen a lot of cases when loss adjusters underperformed. And sometimes it was in favor of the farmer, sometimes it was in favor of insurance company. I caught these cases several times. And again, when I look at the loss adjuster report, I know the point where the test was done. And I compare with the satellite imagery, and I see a totally different situation that the loss adjuster reported. Then there will be a question, what was going on there? Then I will send another loss adjuster expert just to check the situation. Unfortunately, we found several loss adjusters not doing their job correctly. Also, we can use all of this data for aquaculture, for livestock, for greenhouses. I applied it for grapes, for apples, for different types of crops. So really, believe me, new technologies is a must for any agriculture insurance company. So my personal experience, I'm finishing, Jan. NDVI and other indices provide very valuable data, but only in the case when you know how to interpret this data. Because if the system tells you, this is a greenish color at this part of the field, and the NDVI index is 0.67, does it tell you anything? What is the 0.67? You need to know what's the vegetation stage of the crop, what is the crop type. Because 0.67 for wheat will mean that it's more or less in good condition. For other crop, it will be not actually a very good condition. Also, from my experience, I know that sometimes NDVI shows us that the crops is healthy. But when you go to the field, you find there is no grain. Because the productive bodies of the plant, they were damaged before in some time, but the crop managed to kind of re-establish. It was growing, but there is no crop. There is nothing to harvest. So you need to be very you need to understand how to interpret all of this situation. Drones and satellites, they can help us to calculate the number of trees or plants with very high accuracy. I use this for orchards, for wind damage. Also, I used it for forestry insurance, and it was extremely instrumental. It saves us time to assess the loss, and we know exactly how many trees we lost, and it's much easier to calculate the payout. So, as I said, we use it for different types of crops. We tried to estimate the crop burnt area. For forestry, it worked because when the forest is burned down, then it's burned down. So then we look from the satellite and it's okay. But unfortunately, with the field crops, this doesn't work in this way sometimes. So I had a situation in the state of Victoria when we had fire damage to many fields. I thought that we will be able to assess the damage through the satellites. But because of the dense cloud cover and a lot of smoke in the air, we couldn't get any imagery for 21 days. So in this case, I understood that, yeah, we must rely on new technologies, but sometimes they do not work, just because there are some conditionalities. And if any disaster risk management authority or agriculture insurance company is ready to use new technologies, we must understand the limitations, and we need to know plan B, what we will do if technology doesn't work. So I still think that many insurance and banking institutions still don't realize the benefits of new technologies. Many institutions think that it's very expensive, but right now it's not expensive as people think. And again, thank you so much. I hope it was useful to you. And if you will have questions later, I will be ready to answer. Thank you so much.
Thank you, Roman. Thank you very much. Indeed, since that time, the technologies moved forward. And for example, now we have the cloud-free cover globally on 10-meter resolution. And we don't need to invent something because hybridized Sentinel-1 and 2 could be applied. Okay, we're moving to the next presentation with Shannon Berhard from the African Risk Capacity. Shannon, you're welcome.
All right, good afternoon, everyone, and thank you so much for your time. So I'm the Environmental and Social Specialist at African Risk Capacity Limited. I'm working on the repair program, and which is the program I'm going to be presenting to you guys today. Just briefly about African Risk Capacity. So African Risk Capacity Limited was founded in 2014 as the financial affiliate of the African Risk Capacity Group. It is a mutual insurer that is owned by member states. And some of the key role of ARC is essentially to develop and provide parametric insurance solutions to African states. We are partnering with the World Bank to implement the repair program. It is a multi-phase program which is focused on strengthening the financial and operational preparedness of participating countries to respond quickly to climate disasters. We're currently working in 3 countries, Comoros, Madagascar, and Mozambique, and over the next couple of months we're going to be onboarding further 9 countries. And the total funding envelope for the program is $926 million. So the key aspect of this program is essentially to look at risk layering. So we've obviously been speaking about agricultural insurance as a key component, and it is highly useful. However, what we have recognized is that the expense, depending on the parameters and triggers you use, the risk is that the expense of that insurance is incredibly high. So what we have essentially worked on with the World Bank is to develop a number of financial tools that are able to be used in conjunction with each other to manage risk. So in the case of high-frequency, low-severity events, we have structured a reserving strategy with the countries that we're partnering with through a regional trust fund that is then pays out for low-impact events. In the case of medium severity, medium frequency events, we essentially have put in place a contingent financing stream, and that is funded through IBRD and IDA, and that is essentially in the case of events that are moderate. But before parametric insurance triggers come through, countries are able to maintain finance. And then finally, for high severity, low frequency events, we are then able to rely on insurance mechanisms. And the purpose of this risk layering approach is to ensure that countries are able to very quickly respond to disasters. So repair pays out within 7 days, but is also able to rely on sustainable long-term financing options. So we are working with a number of different companies potentially to provide parametric insurance, but the benefit of it is that we're essentially looking at an index-based system that provides measurable triggers that we can essentially identify with the governments. These products essentially help countries to aggregate risk. So if we're looking at something like drought, multiple countries aggregating their risk to respond to a particular disaster. But then at the same time, we're also diversifying that risk across the continent, potentially. And what we're able to then do is create reliance on, so governments are able to rely on the support of rapid funding, as opposed to, for instance, loss models, which require calculation of loss after an event. In terms of the repairs approach to operational preparedness, we're building on existing country systems to be able to respond to crises. And we essentially are looking at this from 4 perspectives. So the first is contingency and emergency response. And by doing what we're essentially doing is looking at planning processes and people and how they are involved in responding to disasters. We work on strength. So further to that, we work on strengthening delivery mechanisms. So the ministries, the organisations that are involved in disaster management, and we. In addition to that, work with the people in those agencies to strengthen their capacity. And finally, what we are doing is working on monitoring and accountability, so ensuring that financial flows are moving through, are tracking where payouts are going, and ensuring that money is going to beneficiaries, and then ensuring that we have got appropriate controls in place to ensure that we are exercising fiduciary and environmental and social controls throughout the program. A key component of this is Funds Chain. Funds Chain is a World Bank blockchain-based system that records and shares all financial transactions. It is essentially, so it comprises of three key components: a distributed ledger, which is essentially that all parties have access to all records and that those are synchronized. That it is immutable, so each entry is encrypted, time-stamped, and tamper-proof, which means that it prevents data manipulation, and finally that it has permanence. So even long after a program like Repair is gone, we're able to track how money was used. And the key part of this is actually creating reliance and traceability within disaster response mechanisms. So we're able to ensure that there is accountability and ensure that every cent that is spent is being directed to end beneficiaries. It enables us to ensure that there is rapid verification on the use of funds after disasters, and we're able to build confidence among governments, donors, and delivery partners, and ensure that there's confidence that disaster management systems are functional. So the key thing regarding repair is that it is we aim to enable countries to be able to respond rapidly and flexibly to disasters, and firstly through the financial financial preparedness, we're ensuring that there is resources available to respond to disasters. And then through the operational component, what we are ensuring is that countries are able to effectively respond to those disasters with the money that they have. If you are interested in the program any further, please feel free to contact me. But thank you so much for your time.
Thank you, Shannon. Thank you very much. And I would like to invite to the floor our next speaker, the lead financial sector specialist from the World Bank, Caroline Cerruti. Welcome, and yeah. Please put the presentation.
Okay. Am I not supposed to have a mic? Yes, great. Hi, everybody. My name is Caroline Cerruti. I'm from the World Bank. And what I would like to do today is share experiences with you in helping countries to scale up agriculture insurance program, because we found this very challenging. And in some cases, technology did help, of course, but that was not the only ingredient. And this is the main message I want to leave with you today. So am I supposed to pass some slide? Yes. Yes, pointer. One thing also I wanted to say is that this year we have a lot of research, public research coming in, because the disaster insurance is a priority topic for the South Africa G20 presidency, as you may know. And we have just published a paper with the Insurance Association of Supervisor on disaster insurance. It is public under the South Africa presidency. And we have a flagship coming up as well on disaster insurance and how to scale up this. So the first point is, if I may, yes. The first point is, when you speak about agriculture insurance, it's very difficult to sell insurance as a first place, right? To Africa, in Africa, or to countries that, depending on their level of income, it's not something that is very obvious. So all research shows that actually in low-income countries, the penetration of insurance is really limited. And South Africa is very different from your neighbor, right? But it's not easy to sell insurance in the first place, to sell agriculture insurance. And what we find is that the countries that are the most vulnerable to shocks are often the least insured. And this is why we talk about insurance protection gap. And in Africa, except South Africa, the insurance protection gap is around 95, meaning that 95% of the loss are not insured. So it is not an easy sell. That's my first message, to sell agriculture insurance in Africa. The second point is the problem we have in Africa is that we have a big vulnerability of the farmers to climate shocks. We have studies showing that in 6 countries, climate shock has reduced the production by almost 30%, so it has a huge impact, climate shock, on people who very much rely on agriculture for everything they do. So the vulnerability is really high, while the insurance is a product that is very foreign to the people we are trying to target. Less than 3% of smallholder farmers are actually insured in Africa. So what are the obstacles when you are talking about agriculture insurance? Mainly there are obstacles regarding the cost, because we're trying to develop programs for people who sometimes are not banked as in the first place, have very little revenue, rely on agriculture for their livelihood, so they don't have any extra money from their agriculture to just buy insurance. So the cost is a big issue, and the cost to develop a product is also a big issue, because this requires data to be developed. The second is the accessibility. We are trying to get insurance to people that are often very remote in rural areas. So how do we get this at scale? And the third point is the customer experience. It is quite a difficult product. When you think about parametric insurance, you have index, it pays automatically. Explaining this to a smallholder farmer is not easy, And we found that the education is absolutely critical and essential to support sale of this product. So tech can bridge some of these gaps. And the first one is on availability. We have done a survey of global insurer and reinsurer to check why they are not going into emerging market. What are the big issues? And they told us two main things. The first one is data. They don't have reliable data to develop a product, and this means that their product is just not available. It's too costly to develop. So getting data available through technology, through satellite technology, is absolutely critical, and it has allowed the development on indices and parametric agriculture insurance. But the second point is scale. Reinsurers are really not interested in reinsuring a program with 1,000, 2,000. They need a lot of scale. And disaster insurance is quite capital intensive, and it requires mobilizing the global reinsurance market. So that's also very important in the design. Those programs should have a lot of scale. And this is where technology can help to sell, to have partnerships between financial institutions and insurer, to use mobile payment. That's really relevant, but also, and to start with, to know who they are selling to. So to tell you a story, we have programmed to sell drought insurance in pastoralists in Somalia, in the Horn of Africa. And one of the big issues in Somalia is there's no digital ID. So we don't know those people. If we want to have a package of services with account and saving and insurance, because it's more valuable for them, we need to know who they are and have a KYC check. So digital ID is really one of the foundation to sell financial services, including insurance. So technology can bring the gap to make it more affordable and make it more available, and also scale up the product. Another aspect is that technology can reduce basis risk, which is one of the big issues in the agriculture insurance program, because, as you know, it means that sometimes people can be compensated what they didn't have a shock, or vice versa. So having a track record, sufficient lengthy track record of data to be able to do an index that is reliable is really key. But technology is not everything. So what we have learned in our program is that you need to have also other basic ingredients to scale up agriculture insurance program. Obviously, if we're talking about Africa, you need people to have access to electricity. You have 600 million Africans not having reliable electricity sources. You have seen it in South Africa until very recently, right? So we have to be very realistic. We also need the basic in terms of network coverage if we are trying to provide access through mobile money and get the payout very quickly through mobile money. So that should be thought through. The second is thinking about scale to able to reinsure those programs. And we have seen that regional approaches where countries come together, very similar to the repair program that Shannon mentioned. Here I'm talking about a regional approach. It's called DRIVE. It's supported by the World Bank, and it's a program where you have Somalia, Kenya, Ethiopia, and Djibouti coming together and pulling all their pastoralists into a single pool and transfer this to reinsurance. And we have found that this is really able to interest the international market. But otherwise, we learned that the program was beginning only in Kenya, and the reinsurer was losing interest. So by putting all those countries together, we were able to provide scale. Another lesson is, for agriculture insurance, consumer protection is paramount, and regulatory regulation also. So in Somalia, through this program, it was very important to sell to people a takaful or Islamic insurance. So again, technology can help sell to people, but as long as the product is consistent with their needs, with the farmer needs. And in Somalia, they need Islamic insurance. So that's very important to consider. And then the big elephant in the room is the premium subsidies. So it's not just in emerging market, but also in developed economy. Agriculture insurance schemes are heavily subsidized, between 20 and 60% all over the world. And this is a big dilemma because most of our client countries in Africa, they don't have the money to pay subsidy all the time. They have a bit of money, but the customer experience needs to be strong enough to have the customer buying after they have experienced the insurance. So for that, the subsidy should taper out, should be really targeted. But again, this is a big dilemma because a lot of countries don't have the capacity, fiscal capacity to provide subsidies. And it's very hard to remove a subsidy after that. So we have an experience in DRC, and we are still going through it, where the bank is supporting a program subsidizing for the farmers, but also trying to combine with other products to show the value of insurance. And my last point is that the combination of agriculture insurance with other product, which is enabled by technology, such as account and such as saving, is really one way to consider the value and enhance the value of insurance. So I want to leave this with this idea. Insurance is one tool. It's for extreme risk, and then it should be combined with other services, other type of financing that can be activated when insurance is not activated. Let me stop there, and thank you so much.
Thank you, Caroline. Thank you very much. And we're moving forward. So now we have an online speaker from Switzerland, Kay Tushen, from Celsius Group Global Parametrics, and he is the responsible for catastrophe programs on a global scale. So could you please put Kay on the screen?
Hello, everybody.
Hello, Kay. Can you hear us? Can you see us?
Yes, I can hear you. I can see you. I really like the previous presentations. There were a few great assists for my presentation that I referred to. It's a shame that I can't be with you today. Sounds like a really stimulating conversation that you're having over there in the room. My name is Kai. I lead Celsius Pro's Climate Resilience Solutions team. I'd say a few words about Celsius Pro and what we do. We are a parametric insurance boutique company, and we have various strands of business focused on software, focused on advisory work, and focused on the provision of underwriting services. So you can see on the slide that we have a bunch of standardized parametric insurance products for the various perils, from frost insurance, hurricane insurance, livestock drought insurance, earthquake insurance, and so on. We also provide specialized risk capacity through our underwriting mandates for those types of insurance through a Lloyd's cover holder with the Canopius syndicate, through a managing general agent mandate with Hannover Re, and through the Natural Disaster Fund, which I'm going to speak a bit more about. And that's the whole bucket of our underwriting work. We also provide specialized technology. We've heard a lot about tech today, and I'll obviously also show a bit of what we do. We have two strands of work there. One is related to our parametric toolkit for brokers, where we kindly invite you to join our webinar next week. I'll put on the QR code later on for you to be able to register for that. And we also provide dedicated white label platform solutions for insurers, which is the one that I'm going to talk about today. My team, the Climate Resilience Solutions team, provides disaster risk finance and broader disaster risk management advisory services around the world. And we've recently grown the team quite a lot, and very much looking forward to the conversation here. Now, coming to the Natural Disaster Fund, the NDF is a vehicle that closes a very important market imperfection or gap in our work towards scaling parametric insurance for not only agriculture but also every vulnerable community that is exposed to climate and disaster risk. And Caroline, you actually delivered a great assist in your presentation for my slide here, where you said that reinsurers need scale. And that's very true. That's what we see in our markets, right? Commercial reinsurers very often don't have enough commercial interest in reinsuring the various insurance pilots or the launches of smaller programs that we're doing around the world. And when you look at this chart, you see that very often there's a grant-funded phase at the beginning of an insurance journey where a new product is introduced or a new distribution approach is being tested. And then when the grant funding ends, this product reaches its critical phase, right? You still lack the scale to be commercially interesting for reinsurers, but you need to grow. You need risk capacity to be able to scale the solution. And that's exactly the gap that the Natural Disaster Fund is trying to close with the provision of reliable and affordable risk capacity. And then allowing the program to further scale to then be catalytic and crowd in further market capital from broader reinsurers. How does this work? The NDF is a blended finance instrument, which means you have the fund here in the middle of the chart. It's capitalized by investments from German Development Bank, KfW, and the FCDO for the British government. And we match every transaction with risk capacity from Hannover Re, our reinsurance partner, which allows us to underwrite a bunch of risks for the clients that you see on the left-hand side of the chart. And actually some of those clients were mentioned in the presentations before. So we are a reinsurer of the DRIVE program with the NDF. We are a reinsurer for the African risk capacity with the NDF. We are a reinsurer for the DRC program that the World Bank is financing, that was mentioned earlier. And we also provide risk capacity to a much broader range of clients, from micro-insurers to risk pools to humanitarian partners. We are also very glad that the NDF is supported with a dedicated technical assistance facility, which was kindly sponsored by the German Financial Corporation, which allows us to do small-scale but catalytic technical assistance projects, such as the one that we're going to talk about today, in collaboration with Land Bank Insurance. And I'm very glad that we are joined by colleagues from Land Bank for the following presentation, so I'm not going to talk too many details, but about our role in the scheme. So Census Pro, with the help of an NDF technical assistance grant, provides a dedicated platform solution for Land Bank to be able to introduce two new index-based products, one for pasture drought, one for a pasture drought solution based on NPVI, and one for aerial yield. The idea is that Land Bank can use the dedicated Census Pro white label platform to introduce and scale up those solutions and to operationalize the work with these insurance products end to end. So on the next slide, you'll see a quick glimpse into the platform. Products were priced on a regional basis, as you can see here by the borders between the different districts. And colleagues at Land Bank are now able to register their brokers and agents and partners who then can go out and sell the insurance products. The platform has a dedicated quoted bind function for both the solutions, and it allows also to monitor the status of the insurance policies and to settle the payouts. If you scan the QR code on the lower right-hand side of the slide, it will take you to the registration page for our webinar next week, where we will do a dedicated demo of our Parameter Pro platform, which is our dedicated tool for the brokers, with a focus on drought insurance next week. I would otherwise do a longer demo of our platform, but I know we are slightly behind time, so I close here. Very much looking forward to your questions in the discussion later on.
Thank you, Kay. Thank you very much. And everything went well, so online broadcasting was really efficient. Thank you for the technical team as well. So we're moving to the last speaker of our session from the Land Bank. It's Lev Andlo, and please come to the stage. Welcome.
Okay. Good afternoon. Okay, let's try it again. Good afternoon. Last time, good afternoon.
Good afternoon.
Thank you. All right. Thank you so much, Ian. I suppose there's quite a bit that's been covered that I was going to talk about in my presentation. But I think what I will do is to talk about the market experience, especially after the Celsius Pro presentation. So just by way of introduction, so I'm from the Land Bank Insurance Company. So we are the insurance entity that is a subsidiary of the Land Bank. A lot of people would know the Land Bank because that's typically where you find money from, right? So we are the guys who provide the insurance protection on the crops mainly, but also on the asset as well as the credit life that you would get from your loan. So our mandate is very much linked to what Land Bank does, and pretty much to align to what the Department of Agriculture also does in terms of covering risks linked to agriculture in the market. Then in terms of just an overview of what are some of the typical challenges that you see in the South African market, I think in the previous conversations we've pretty much covered the areas around typical catastrophes that you find. So your storms, flooding, drought, and so forth as a result of climate change. I think that is sort of your more common kind of disasters that we are picking up in the market. We also rely quite heavily on government to be able to cover, those risks where catastrophes have happened. So we rely on government to be able to bring back people to where they were before those, and to resettle and to make sure that livelihoods and the economy progresses. We've got quite a number of products that are available in the market, but in the main, I think as insurance, we also admit a lot of the products that we have developed are not necessarily geared for emerging farmers. I think we've made that point in terms of affordability, in terms of access. But also more importantly, I think if you look at the South African insurance context, for commercial insurance in particular, the case is a little bit different in terms of penetration at the lower end. What you see though in the personal side, the personal insurance side, your penetration is a little bit higher, right? On the life side, mainly in South Africa, driven by funeral products, which are mainly distributed through community saving schemes or stokvels, as we call them. So on the commercial side, and especially on agri insurance, the case is very different. Trust is very important in this game, and trust mainly is built by user experience, is built by word of mouth, is built by associations and exposure to some of the risks that people would cover. We also have transparency, and this is a lot of what you get in the market from a perception perspective, right? So linked to trust is also the fact that the users are not understanding the technicality of what is contained in the policy wording of insurance products, right? So the work that we do continuously as insurers is to try and make sure that what we put in the policy wording is very simple, it's very easy for people to read, and it's very easy for people to understand. Credible data, I think we've covered this point. Cost, we've also covered the point. But also what is important, and I think this is the bit of work that we continuously need to do, is to make sure that people understand the value of insurance, right? So when you understand the value of something, to be able to afford it or make available a budget to pay for it is a little bit different, right? So people don't understand insurance, they don't understand the value of insurance, and that's why we always run into situations of perceptions of trust, and also more importantly, affordability. Okay, so to talk about a little bit in terms of what Kay was talking about. So Land Bank Insurance has been afforded the opportunity to pilot parametric insurance for the next 2 seasons. So effectively up to the end of September next year, we have been granted the license to run a pilot on 2 products in the main. So the one product is the pasture drought. So pasture drought is mainly focused on livestock cover, right? So which means that in a particular area, we would look at the average rainfall based on data. Data becomes a very important aspect of it. And then look at below rainfall, what would have been the loss in forage. So in other words, the cost of feeding the livestock, that is what we'll be covering in pasture drought. Area yield looks at covers such as drought, covers such as floods, and pests. So this one will cover, for example, your crops. This one will cover your livestock. Now, the main aim of this, supported obviously by Celsius Pro and IFC, who are our partners in this exercise, the main aim of us piloting parametric or index insurance in South Africa, number one is to make insurance affordable, especially for emerging farmers, right? We've seen cost is an issue. Number two, to make sure that the understanding and knowledge of insurance reach a lot of people, especially emerging farmers. Three, which is also a most important thing, is this aspect here, financial inclusion. Right, so financial inclusion basically means that you want a lot more people to start participating in financial services, i.e. buy insurance, use insurance, claim from insurance, right? And then in that way, you've got a lot more people that got a common understanding of how insurance works. So I'm going to also share with you quickly the lessons thus far that we've learned. So we started running PDI, which is the livestock product, last year in October. And we are starting again, or we are in the sales window for this season. We're going to run a last sales window next year. So what we have seen is that the product, because it's different and it's new, the regulators in the country have not classified it as an insurance product yet, which means that the normal regulations and laws that apply to normal insurance product don't apply to index. So there's a plus and a minus to it. The plus to it is that you are able to distribute it a lot more freely without the frills and the constraints of regulation. The minus to it is that you always have to check, which sometimes costs you a little bit of time because you are not sure what to do. So it's not classified as an insurance product. Design challenges, I think we've seen. Data plays a big role. So what happens is the pilot is run in 5 provinces. So Northwest, Free State, Limpopo, Mpumalanga, and Eastern Cape. I think there's a 6th KwaZulu-Natal in some instances. So the availability of data is very important because the pricing of the product as well as the claims assessments depend on the data that is available, right? So to the extent that data, number one, is available, number two, that data is reliable is very important, central to the development and assessment of this product. Thirdly, insurance as it is in a South African context is a very technical subject. Right? Now, you can imagine having to sell or to explain to a farmer how an index insurance product works, right? It takes a lot of time. So we've done quite a lot of training. To date, we have trained close to or just over about 1,800 farmers in the respective provinces around index insurance. We have trained and we use about 39 brokers, FSPs, in other words, entities, with close to about 60 individual agents. We have partnered with 2 big cooperatives in the country to help us aggregate from a distribution point of view and also to give us access. So the challenge that we see is that the window to sell is very short. So in other words, from where we start the sales season to where the season closes from an underwriting perspective, you've got about 2.5, 3 months to sell. Now, if you take it back to this issue here, right, you need a lot more time to consult. So there's a lot of toing and froing that we do with farmers. There's a lot of toing and froing that we do with the brokers themselves. Number one, for understanding, but also to overcome. So I'm a salesman. We talk about sales objections, right? So what is it that you see that I'm not seeing, or what is it that you do not understand about the product so that you're able to buy? The other one that's important, maybe let me skip these two because we've spoken about them. But the most important thing, so thus far, what is most critical out of the subject or out of the pilot is the issue of affordability. Almost 50% of all of the codes that we have generated have come back with affordability being an issue. Now, why is that the case? I think Caroline touched on it. So if you think about an emerging farmer, the bulk of the money that they spend goes to their farming operations, number one. Number two, in a South African context, and different from what we've seen in other case studies where index insurance has been run, in South Africa, we don't have premium subsidies, right? Now, if you think about it in the context of an emerging farmer, a small operation, the bulk of their money goes into their farming business. Insurance tends to become a little bit expensive. We do acknowledge that. So in some case studies that we have seen, either index insurance was linked to an output or an offtake arrangement wherein the insurance premiums are covered in that funding, or either there has been some form of premium subsidy from the regulator or from the government or some other people in that particular space who would subsidize premiums. So we have seen affordability is an issue. However, though, I think there is definitely space for this product. So we will conclude the pilot at the end of September next year, and then conclusively we'll be able to then provide to the regulators what we have seen conclusively as results for the index insurance pilot. So I'll end it there, and then we'll take questions later. Thank you.
Thank you very much. Thank you very much, Lefa. So no matter how much we tried to be fast, we have literally 3 minutes for the questions. So I guess we will not put the chairs on the stage, and considering the audience, do you have any questions, any comments? Think of that. Okay, we have. Yes.
I just have a simple question. What do you mean by index insurance compared to the normal insurance? What is the difference?
Oh, who's gonna answer?
Okay, so index basically means that it uses data, right? So data based on either rainfall or data based on forage loss, right? The key component of it is data. So if you think about how normal insurance works on the basis of actual loss. So if you're a farmer and you experience hail, which is a weather event, so we look at your claim on the basis of the loss event, which is hail. In this instance, we will then say this whole area here has experienced below average rainfall at a certain level, which then means we expect everybody to suffer the same loss. So on the basis of that data, then we'll do the assessment of the claim. That's the main difference. Thanks.
Thank you. Another question over there. Could you please pass the microphone? Okay. Very lively discussion.
All right, thank you very much. My question involves the small-scale farmers. I believe in all the presentations you are focusing mostly on commercial farming. What about the small-scale farmers? Do you have something in place for them so that they can also develop and get to a point where they become commercial? It is actually, my question is directed to all the speakers. Thank you.
Who's willing to answer? Okay.
Well, have a look. Insurance of small-scale farmers is really a big challenge all over the world. But several countries, they implemented the programs. And we can look at Brazil, where they have a special program where the government provides subsidy to the smallholder farmers and family farms, but commercial farmers, they don't receive any subsidy. But the Minister of Agriculture implements a huge public dissemination and awareness campaign for the farmers, and they have specific program, kind of a public awareness program, to let farmers understand and know how insurance works. Also, there are examples of community-based or group policies where the farmers can get access to insurance through the villages or farmers cooperative. I myself had the same program in New Zealand and Australia for rice growers and sugarcane. So it's not the story only for developing countries. Even in developed countries, sometimes this is a better solution. In this case, we can do it, and we've seen these programs implemented in several countries. Also, in the Philippines, about 45% of the farmers are insured, and most of them, they have farms 1 to 2.5 hectares. In the Philippines, a farm with more than 2.5 hectares is considered large. But because they have developed their program for years. They started in 1978, and they do it through the state-owned company, Philippine Crop Insurance Corporation, and they developed during all of these years a whole network of the representative office and the agents. So it's a very long journey. But right now they insure about 45% of the farmers, and it works. It's actually one of the best penetration ratio that I've seen all over the world within the small farmers farming systems. So kind of these are the examples. And also there is a very high subsidy in India, They also insure farmers from 1 hectare to 2 hectares, but they use multiple distribution channels like the banks, the farmers who get loans. They use the common service centers that provides services to all rural populations in rural areas. So they have a special mandate and they are obliged to do that. They also use brokers and insurance agents. So it's a multi-tier kind of a system, but there is huge subsidy, and the government actually provides stimulus to the distribution partners to assist promoting crop insurance to smallholder farms. So it's not easy. It requires lots of efforts and involvement, but it's been done in other countries. Sorry.
Maybe just to add a South African context to that. So in a South African context, so if you look at an institution like Land Bank, so Land Bank in collaboration with Department of Agriculture, there's a lot of support programs that we do for emerging farmers, literally from providing financial literacy education on how insurance works. So on the Land Bank side, they do what we call blended finance scheme funding. So you have a funding program that is part loan, that is part grant, right? Now, in that also, there's an education element that comes with it. So effectively what we're trying to do is to say, as an emerging farmer, understanding that you come from a disadvantaged background, you also have a lot more to gain in terms of grant to get to a point where you become a successful commercial farmer. So there's assistance in that sort of funding. In there also is a portion that is allocated to funding insurance premiums. So in other words, it's funding also including risk, right? Then on the insurance side of it, quite aside from the education that we provide in making sure that as an emerging farmer, you actually do understand that insurance is part of your farming operation. Piloting products like Index is actually intended to make sure that insurance does not become expensive, right? And more importantly, for you to be able to understand the value thereof as part of your farming operation. So there are assistance programs that Land Bank provides. Thanks.
There's another question here.
Great, thank you so much. Chongwane Namane, Space Commercial Services, SES Space. We're an engineering company, core business satellite engineering, and we're developing space infrastructure. One of our satellite constellations, in fact, is based on agriculture, so that is AgriSense, and we're developing on aggregating all of this data, all the way from smallholder farmers to commercial farmers. My big question, and I suppose to agro insurer, World Bank, as well as land bank insurers, is what is the actual size of this commercial market? Because we know and we understand that there needs to be an economic driver to it, right? In terms of scale, and what does that look like, particularly for companies like ours that are developing the level of data, satellite data, space infrastructure that is required to be able to get this risk-adjusted information from hyperspectral imaging to speaking about soil moisture to seeing what's happening with crop yield and health as well as infrastructure. What is the size of this market?
Who's willing to?
Okay. So, yeah, very important question. So from an insurance premium space, that's what I know best, the size of premiums in the agri space is about 2.6 billion, right, in rand terms, 2.6 billion. The size of the hectareage covered is just over about 2 million hectares that's covered in South Africa. So just to give you a sense of the landscape, right? Now, where you probably then make a differentiation in terms of the segmentation, right? It's obviously more towards commercial farming. Right, so if you drive around in South Africa, a lot of what you will see in agricultural space is very commercial, right? I think 1% of it is what you will find in the emerging farmer space. I can probably get you some detail in terms of what the funding looks like from a land bank. I'm sure that's information that could probably be available just as a whole number. But hectares about 2 million that's been covered from a farming space. Premiums about 2.6 billion for the industry. Thanks.
Thank you very much. There's another question here.
Good afternoon. My name is Elizabeth, Queen of Herbs from Rare Web Naturals. What I want to ask is, Land Bank, when you, as a small farmer, how small or how big must I be so that I can qualify to be or to have an insurance at your institution?
Okay, so you don't necessarily have to be very big or very small. I think what is important about insurance is whether you've got an asset to cover or whether you've got a crop to cover. That's what's important. So part of what we do here is we literally look at, so let's talk about people who are livestock farmers. So somebody who's got 10 cattle, 5 goats, 3 sheep, we insure them. Right, so literally as small as that, and to a mega farmer, somebody who would have thousands of livestock. So it's just literally about whether you have something that it can be insured, livestock or crops, and we take it from there.
Thank you very much. Any more questions? I would like to thank everyone. We don't have too much audience, but very high participation, I would say. Almost everyone had a question, so that's good. I appreciate your time. I appreciate your participation. I also would like to thank all the speakers for your contribution, and I really enjoyed this session, and I wish more people could know more about the topic that we've discussed the last hour and a half. So, and this, probably just to conclude, is probably one of those gaps that there's still very little knowledge and interest in learning about insurance solutions, about technology solutions. And there's still quite a mile to go to enhance that understanding in a society, to bring that culture to the farmers, and for the government also to understand that if there's something not insurable or not possible to insure, to step in as the active participant of the market and ensure the stability, the food security, the social stability in the country, and with the help of such partners like African Risk Capacity, of the World Bank, to enhance the system, and not only in South Africa, but basically in the whole African continent. So thank you very much, everyone. I appreciate all your time and participation. Thank you. And before we leave the speakers, could we just have a small photo session over here, just to remember this moment?